here we go.
Okay, so I don't think everybody's familiar with what a MIC is, but some of the people here are. So I'm just going to start by telling you who I am and where I came from. And it's a long, boring story, and you can read it later. But I started in real estate around 1993 with RE/MAX, and I worked a lot in land assembly, new construction. And then I became a mortgage broker in year 2000, and I've owned a brokerage now for well over 20 years. We've just started this new brokerage, Interest Advantage Elite, during COVID, and we're looking to find brokers that want to join and foster an environment that has a lot more to offer than a regular brokerage. So if anybody's interested in learning more about that, you can reach out to me. So a MIC is a mortgage investment corporation. So it's a company that lends mortgages in Canada. So if you own shares in a MIC, you buy shares in a MIC, you can invest your money in a diversified pool of mortgages. So Bob Smith and I pool our money with a bunch of other people, and it's lent out on different mortgages, first mortgages, second mortgages, and so on. And these investments are qualified under the Income Tax Act, so you can use it for RSP, TFSA, any number of investment vehicles, which is really important for your RSPs. If you're invested in mutual funds, you might want to rethink that. Okay, so how you get your money from a MIC. Now, a MIC can distribute dividends, and usually it's interest from mortgages and revenue from their property holdings. They can pay out capital gain dividends, and it's typically from the disposition of those investments. So as money comes in and is lent back out, you can free up your money and take it out. And the size of the MIC has a lot to do with that. So somebody not muted, but just gonna move on. Okay. People like to know if a MIC is safe. Because we've been through Aaron acceptance and several other shady situations, we want to emphasize that that's not the norm. There's a lot of MICs that run in the city here and across Canada, and it is a financial organization that uses real assets to secure mortgages. So it provides a way of mitigating the time and risk if you were going to do an individual mortgage. Like, people come to us quite often and say, okay, I have $100,000, can you lend it out on mortgages for me? And the problem with that is that all of that risk is on the one person, where in a MIC, it's several mortgages inside that pool of mortgages, which really reduces the capital risk loss. So there's a manager that's usually appointed to these MICs, and they manage the company's operations. They look through an investment and they analyze whether it's right for the portfolio of that MIC. So normally there's more than one person looking, and quite often, I think, Sandy, you'd probably agree that there's around 3 people that look at the appraisal, they look at the credit bureau, the ability to pay, and how these people are going to get out of the mortgage that we put them in. So managers, a lot of times in the city, the managers charge a percentage of the assets that they control. So maybe 1.5 of the total portfolio would go towards paying this manager to make sure that those mortgages are administered properly. So this is all kind of long and drawn out. I'm going to send you guys a copy of this, so if you want to read more about it, you can. But these MICs, many of them volunteer for an annual audit, so that's taken out of their hands and into a third party. And especially right now, there's a lot of, when you invest in a MIC, usually your RSPs would go through a vehicle like, it was Computer Share, but now Olympia Trust has taken over a good number of it. So what happens is, once you put something into an RSP, it has to stay moving around in this investment vehicle. You can't bring it back into your own hands and then move it somewhere else. So these administrators charge a small annual fee to make sure that RSP stays where it's supposed to be. And then the audits guarantee that if the people managing the money screw up the numbers, that there's a way to fix it. If they didn't have the audit, it would be a lot harder to track if something were misallocated. So now that we know what a MIC is, let's get to how we can maybe make some money from it. So I don't know about you guys, but in my neighborhood, every second home, there's somebody over 90 that probably shouldn't be there now. They might be setting fire to their kitchens, falling down the stairs. And used to be they would sell and buy in White Rock or sell and buy in Chilliwack, but now it's almost impossible to have any money, no matter how much you sell, and move. And a lot of people don't want to move; they like where they are. So, puts their children in a state of, okay, what are we going to do with mom and dad? They can't sell and move. We could get them nursing. That's very expensive. So obviously a chip mortgage is something you would look at, but a MIC is something you can talk to your children of the parents, I guess. So people my age who are managing their parents, and we can help them with some solutions. So seniors in Canada in 2022, 1 in 5 Canadians were at least 65 years of age. So we know that these homes that they're living in, a lot of them are getting torn down as soon as they go, and that the condition of the house isn't always even safe by the time they're hitting, their 80s, right? So for those aged from 65 to 74, 2 million, those between 75 and 84 are 2.8% of the population. So obviously, when we look at the commercials online, mostly home equity bank, but there are equitable mortgage, a whole bunch of others stepping into that zone for reverse mortgages. Trouble with that is that sometimes the parents aren't really mobile enough to be at home in a reverse mortgage. So some of the concerns we have is that they're being neglected, and young ones like me we have a lot to do. We don't have time to be home with mom and dad every day, all day. But at the same time, I don't know about you guys, but John's mom's taken a fall quite a few times where we didn't even know until maybe 4 or 5 hours later, and we've had to call the ambulance to help her get up. The homes, like I said, they need updating. They're just becoming problems, and we don't have time to go and do all the yard work and maintenance that it takes to keep them in their homes. So nevertheless, they're in vulnerable circumstance. So the options that we look at is selling their home and moving them in with us. But I can tell you, my mother-in-law's home flooded, and for 6 weeks she lived with me, and I love her. She's really great, but we found out we should not live together. It just wasn't good. So if they sell their homes and they move in with us, and that's an option for a certain time period, but it becomes a mobility issue sometimes when they get into their seniors as well. And then do you have the strength or the lifts or whatever it takes to put them in the shower and do all those things for them? So the point of this is to sell the home and try to pay for an assisted living facility. So, or nursing if they have to go into something that requires a little bit more care. Now, the trend has come for places like Parkwood Manor in Coquitlam here, so any of you that work in this area might know, but this is like a 27-acre property of really beautiful suites. And they're all different. There's some 2 bedrooms, some 1 bedroom, depending if you're a couple. There's some studios, and they're all geared towards your income. Now, the weird part of it is this pretty little hotel of Parkwood Manor is the same price as the dumpy little one that you'll see in other areas where you go in and people are, stirring their tea all day and there's nurses everywhere. This is like a hotel. You walk in, there's a beautiful dining room. They all have their own suites. They have shuttles to take them here and there. So it's really a hotel environment and a luxury sort of style. Now the problem with that is this is how much it costs. So in Vancouver, the average price is around $4,000 a month. It was 20, I think when we put John's mom into Parkwood, it was about maybe 2,800, and every year it goes up and up and up. So in some of the areas like Kelowna, it's a little bit cheaper, and then you get to Victoria and it's really expensive. So one of the women that we talked to commented, she said she desperately wanted, that mom and dad wanted to leave her money, but it just wasn't meant to be. They thought if they sold their house and they had to pay for the assisted living, that inheritance is going to dwindle. obviously that's another reason for the kids not to talk the parents into making a move in the first place, even if it might not be the best solution for the parents to stay put. So if we take this scenario of a mortgage investment, and in the case of the people that I work with, you have the option of a monthly feature that you cannot get from a GIC or something like that. So you put your investment in and they pay you the interest on a monthly basis, which subsidizes that assisted living. So for my mother-in-law, it was years ago, we put her into assisted living. We sold her townhouse for $450 and we put it into a MIC, and that combined with her OAS and CPP completely cover her housing expenses. And when you move into one of these places, all your meals are included, they do your laundry, all except for your personal clothing. They do housekeeping for you. Everything's included. So, you know, they would have enough money if they sold their house for $1.5 million, say in my neighborhood, the ugly, you know, barn red house with no updating and wall paneling is probably 1.5. If they invested into a MIC, there's plenty of return annually in that MIC and monthly to cover the assisted living and still have some extra money should they be healthy enough to take trips. And these assisted living facilities, they still can have their cars and behave just like you would inside of a home. So these are great options while parents are mobile. But the reverse mortgage is something that we're selling a lot of this year, and the rates are coming down. But it's something that I think realtors should be aware of for other purposes. You can use a reverse mortgage to buy equity properties, for instance, and that's been a pretty popular option. And they allow you 55% of the equity starting at age 55 and up. So it's not so much gauged on income, but on equity. So as that equity is dwindling, we're seeing a little bit of tightening there, but Equitable will do 80% of the equity by the time they're aging out at 85. So this just gives you some examples. So if a person had a chip mortgage to begin with, to 55% of the value, and the sale price was 1.5, and you sold the house, the investment funds would be approximately 675, give or take commissions, right? So if you took a yield of 8%, the annual income would be 54,000. Monthly income before tax would be 4,500. So that's a little bit tight, but they still have their OAS and CPP to the tune of probably 1,100-1,200 minimum per person. So if the couple's still there, they still have plenty of money. And as I said before, they don't pay for groceries or for heat or even cables included in some places. I think internet in the building is included. They can have their own. The best thing about it is that they're not touching that principal investment. So the children of the aging parents are not going to feel like that investment's being eaten away as they're living in the hotel. So that's all I got to say. I'm trying to make it quick and clean as possible. So maybe what I'd like to do is see if anybody has any questions. I'm gonna stop the share and we can get into if you guys understood everything I said.
If you have any questions, just unmute yourself and ask. And then we ask if once you're finished your question, if you'd mute yourself again, just to keep it nice and clean. Any questions, anyone? We have no comments, so.
Yeah, I have one.
Sure.
Yeah, I just wanted to know if the yields, like the 8% you're talking about, is it like guaranteed or, and also what's the history in the last like 3 to 5 years?
Okay, I'm gonna let Sandy answer that because I don't have an EMD license. I can tell you what a MIC is, but I don't talk yield. So
actually there's quite a few number of MICs that have a very different type of return profile, as well as size. So if we want to talk about the one that Heather put up the screens on just a moment ago, the Tri-City Group, the historical long range return has been on the low side around 7%, on the high side about 8%. Is that going to continue in the future? Well, I don't know. But the higher the interest rate environment is that we see today, the less liquidity there is available. Basically, a high interest rate environment is usually a signal, or rather what you're seeing is a byproduct of less liquidity in the market. Less liquidity in the market generally drives up lending costs, rates, and investment returns right across the board, right? Because everybody's fighting to borrow money, right? But there's not enough supply of the money. So I guess that's a long way of saying that it's not unreasonable to see some mix out there deliver 8% returns. It's never guaranteed. A MIC doesn't have access to any type of insurance like a bank does. You know, a bank has access to CDIC, right, which is only available to banks and depository institutions like credit unions. But MICs have other advantages. MICs, you know, in general, don't have as much regulatory burden as a lot of banks do, for sure. And they're very nimble. You know, most MICs are shorter term lenders. So as the market changes, MICs will change their lending parameters and, you know, go with it. A bank is like, when they give out mortgages, they're most often, you know, 3 to 5 year fixed terms, right? Which kind of in a way handcuffs the banks, right? Don't you think today that all those people who signed those, you know, 1.7% 5-year fixed terms over a year ago, do you think the banks would love to call those back? They
For
would love
sure.
to any day, because, you know, they could turn around and redo a mortgage at, you know, triple or 4 times the rate on a 5-year term. They would love to be able to call those loans back, but they can't, right? They're tied into those. MICs generally don't tend to be tied into such long-term rates, so they're able to kind of pivot a little more than, you know, as the rate environment changes.
And OC, the one thing I wanted to point out about Tri-Cities in my presentation is that a lot of MICs that you invest in do not allow a monthly withdrawal either. So you could get an annual either reinvestment of your dividend or an annual payout. But the monthly feature is much more attractive when you're talking about the situation where people need that extra monthly income. Like I have some people that rent and they just inherited from the mom, you know, 450,000, their share of mom's home, and they're putting it in because they want to have a monthly income. So it doesn't affect the principal as well, and they get a little supplement.
So Heather brings up another big point to consider. If you're looking at making some kind of investment in a MIC or private lenders, I kind of blanket that whole industry with, the rate of return is of course important, but the frequency in which you receive your return is also important, especially if you have uses for those funds. So the industry average, I believe, is quarterly. So your average typical MIC will pay an investment return due every quarter or after the end of each quarter, so 4 times a year. Those that pay that every month, actually fairly unusual. I know that Tri-Cities, the ones you saw on that slide, does pay every month, but that's not actually very common, to be honest. And if that's an advantage to you, that's great. If it's not an advantage and you don't need your money every month, then, you know, you're free to look for something else that, you know, that maximizes your return, right? But it is an important consideration in this equation if you're really looking at the frequency in which you need to receive your returns.
Right, and your TFSA is non-taxable as well, so it's nice to get that return monthly.
Yeah.
If you invest in that. So does everybody understand the assisted living? Has anybody been inside one? Or two?
Yep.
I do have a quick question about that.
Sure. Sorry, Sandy, you're muted.
Sorry. I don't have a very good understanding about the differences between, isn't there like private and public assisted living facilities? How does that work?
Well, if you have money, basically they'll make you deplete your money to pay for the facility until you don't have any money left. So, but in Coquitlam, for example, when we were looking for a place for John's mom, there's about 6 places here. There's one, the Belvedere, which is one side is semi-hotelish and the other side is nursing care. So, and then you have can't think of the name of it on Laurentian. They just built it. For some reason, the name's escaping me. But it's not very nice at all. They have apartments, but it's nothing like the one she's in, and it's the exact same price. So the price
So-
fixing is everywhere.
So, so just so I understand, there's not like a group of public housing and private housing. It's all kind of under one umbrella, but it's just the method of payment that delivers that difference.
No, because where Gladys is now, it's not government controlled at all. They're
Okay.
like that group of companies, I believe, is owned by a Chinese conglomerate, and they bought up a bunch of private ones that were not government held.
I see. So
And
there
they're
are
all managed.
there are some that are government designated ones, and that's where the income part comes into play. Is that right? Where they measure your income based on how much you can afford to pay. Is that right?
That is, so in some of them, yes, like the gist of it, they will look at that and make you pay accordingly. And it's not even income, it's also got to do with assets, which is where you kind of don't even want them getting involved in that if you can help it.
Interesting.
So, hey, Sandy,
Yes.
my mom and dad were both in a long-term care facility because of their infirmities and dementia and all the rest of that kind of stuff that was going on. So the way that they pay for the facility, which includes their medical care and their prescriptions and all the rest of that kind of stuff, it's based on their taxes on their T4s. And they take a percentage of that, right? And only a certain percentage of it.
Were they homeowners, Thomas?
Yeah, we sold their house before they went in because they were
Yeah.
becoming a real danger to themselves.
Yeah.
Mm.
So a
It
lot
was-
of times what the kids do is put somebody on title, and then the money's given to the kids before they go into the facility, and then they don't have any money to pay for it. So
Yeah, we
that's
just-
on them.
We kind of knew what was going on, so we had, well, we being me, I talked to the bank and figured out how to put the money away so that once we sold the house, because I had power of attorney and I'm the executive and all the rest of that kind of stuff. It's a matter of making sure that they had X amount of dollars sitting in there in separate accounts so that we wouldn't have to worry about anything happening if they needed to get a trip to the hospital or
Right.
get a wheelchair or whatever else they needed. So it made it much easier to handle everything when both of them died this year.
And the upside of the
Sorry to
MIC
hear
is
that.
that your expenses and your principal are still protected for your inheritance, which is
Yeah.
much better than letting Royal Bank let it dwindle down to whatever, depending on
exactly.
how long they live, right?
It was the advantage of having a banker that was actually friends with my mom and dad. Still emails me.
That's nice. I'm sorry to hear about your parents.
Sorry to hear it, Thomas, but
You
it's
know,
good
it-
information.
There's a difference between an assisted living facility, which is more like an apartment kind of idea. They're not very big, but they're still an apartment idea with a kitchen and a cafeteria and all the rest of that kind of stuff. And long-term care facility, which is they need medical every day,
Yeah.
right? Because we had a nurse coming in for at least a year before we made that decision. And all of them are by region to region, right? Vancouver Island Health and Fraser Valley Health are two different organisms, and they do work differently.
Hmm.
So,
Well, that's nice to have Chip for those times when you do want them to stay in their residence as well. So
It
Yeah.
that's an alternative.
it sounds like it would be very expensive if they have to go to full assisted care living
not really. It's totally based on the
on
percentage
the income. Yeah.
of their taxes, nothing more.
Yeah.
Heather, one thing that said Cheryl was commenting, yet her late mom and father now, I guess, Cheryl, you were in that assisted living. I'm going to comment on something because my mom is in assisted living over on the island at Berwick, which is a very expensive private one. And in the same unit, you will often have assisted living and long-term in the same building essentially or complex, so that when the time comes to move them into long-term care, it's not a far, they still are with the same facilities.
Yeah.
But in these cases, they are not cheap. And like Thomas is saying, it really floats on what you can afford, so to speak, once you get into that level. But one thing is assured, whether you're at Berwick or whether you're at Crofton Manor, whatever, in these places, you can easily, in the transition between assisted living and long-term, easily double that amount on a monthly basis right away, if not even more. So you would go from perhaps, say, a $6,000 bill a month, which is what I think she's even more now, to anywhere from $12,000 to $14,000 a month in no time, moving it from one section of the facility to the other. And it's not like you're getting anything more but medical. And that is really just at the discretion of the facility because it's privately owned.
Yeah.
When you get up to there, what I'm saying is that the costs can just skyrocket in no time on the discretion of whether they need assisted living or whether they need long-term.
Cheryl, did you have something you wanted to say? No? Okay, anybody else have any questions or comments that they'd like to make? I'll send the presentation out so that you have contact info for Tri-City. And at Tri-City, you'll find Sandy and Jim, eager to help you with any questions that you might have if you're thinking of looking at investment. I have my own mutual fund license, and my money is all in a MIC. So it has been for many years. And I probably would do nothing different. So I thank you guys. I'm taking a half hour of your day, and I really appreciate you showing up. And if you have anything you need, just reach out. I'll send the email with the presentation once we're finished here today.
Is there anybody who has any other questions at all today, or any questions in general to Heather or Sandy?
It's a quiet crowd.
Okay, well.
Well, I can, if anybody wants just a quick chat outside of the context of this meeting about anything else, I can stay on for a few minutes too, if anybody wants to do that. So if anybody wants to talk about other things like, as well as some of the private lending stuff, we can do that too, as an off presentation side.
Thanks a lot for coming, you guys. Those of you
Thank
who
you,
are
Heather.
going to